Thank you very much for coming to the credit union breakout session. We got the big room because we got the biggest turnout. You look around and you're like, doesn't look like a big turnout, but it actually is. It's just a huge room, so we're not filling it. If you feel like coming up to the front of the room, there are tons of spaces, so please come up if you wish. And this isn't your only chance at any point in the session. You want to come up, please move up, no problem. Oh, Shandor's already coming. So this session is called Long-Term Vision and Evolution of the Credit Union System. You may have seen, instead of the word evolution, transformation somewhere. At some point in discussing this with some of our FISRA colleagues and the panel, we decided it would be more fitting and more accurate to call it evolution as opposed to transformation. So if you see that word change, that's why. We have a fantastic turnout in person. I'm not sure how many people we have online, but thank you very much for all of you that are joining online as well. Is this advancing? I swear I'm pushing the button.
There you go.
Yep, you got it.
You're good.
Wait, what did I do differently the third time? All right, so this is the agenda. We have 75 minutes. Let me take a look. Yeah, we got 75 minutes, a couple of minutes more maybe. I will first introduce our panelists, and I think probably many of you know most of our panelists already. Then I will talk about why this topic is important for FISRA and why we're doing this. That will probably take about 10 minutes. Then we'll go into the panel discussion, and I'm just facilitating. The attention should be on these four fantastic people here, not on me. And then we're going to save some time for questions at the end. So we got a little monitor here, and your questions do appear on the monitor so we all see it, and we'll go through some of those. If you have a question while we're going through the session, please send it in. Oh, thank you. If this doesn't work, use this. All right, cool. I'm just going to go straight to that one. Yeah, don't wait to remember what your question is to the end. Send it. You can also do anonymous on your Chime app. I think that's what it's called. Send it. It'll go into the queue, and then we'll address it at the end of the session. All right. So you have the bios for everybody that's on panel, so I'm not going to give you a long description because we have a fantastic panel, but I will give you a very short description and introduce our four panel members. We'll do it by alphabetical order, by last name. So Jackie Davison first. She is the board of Libro Credit Union, and she's held a number of senior public sector positions and has been leading Libro's evolution for the past 4 years, since 2020 when she took the chair role. Chris Dobrzanski, who's sitting to the right of Jackie, he flew in, I think this weekend, you flew in from Vancouver. So Chris lives in Vancouver, but our panel members could not. We were told that we could not do this remotely. People can join in remotely to listen, but we couldn't have panel members remotely. So Chris was kind enough to join us and fly here specifically for this panel. So thank you very much, Chris. Chris is the retired CEO of Citizens Bank of Canada, now known as the Van City Community Investment Bank. Chris served for many decades. Chris, I won't say how many decades because nobody will believe it, serving the credit unions in British Columbia, but also the Canadian credit union system across the country. Chris has been a very devoted leader in the credit union system. I've known him for many years, and I can attest to that he is incredibly devoted to credit unions. Michael Hatch. Jeff Guthrie initially was on our panel. Last minute, he throws this at Michael. He's like, Michael, you go, because he had some travel plans that turned sideways. So Jeff wanted to be here, but he can't. Michael, thank you very much for last minute. It was literally last week when Jeff and I told you that if you could please step in for Jeff. So you should get a big bonus. If it was my decision, I'd give it to you. So you got to talk to Jeff. Maybe I'll talk to Jeff as well.
Is this session being recorded?
So Michael Hatch is the CCUA's Vice President of Government Relations. And thank you very much, Michael, for stepping in. And Lloyd Smith, I think most of you know Lloyd Smith. He is the CEO of First Ontario Credit Union. He has been the CEO since 2019. but he has served as a leader in the credit union system in Ontario for, hard to believe, but 30 years. You look really good. So thank you very much for all the panel members for joining us. And so what we'll do, this session is not about FISRA or me presenting, but we want to put things in context and give you an understanding of why we have this session. But ultimately, I will stop talking at some point and we'll turn it over to panel. So the financial services sector is always evolving and always has been evolving, which means that financial institutions must adapt and serve their members to remain competitive. The pace of change has and is expected to pick up over the next few years. And some of these change drivers, and we put 5 of them there. Now, this is not an exhaustive list, but there are some very important ones that are up there. These change drivers were discussed in this morning's session. I know a few of these have already come up, not all of them necessarily, but a few of them have come up this morning. So I'll just go through them pretty quickly. Big banks are becoming more efficient and effective at member services. And fintechs and other entrants seek to take market share away from established players, like credit unions. New technologies are redefining back-end and customer-facing service delivery. Ontario's demographics is changing and evolving as we welcome immigrants and become increasingly urbanized. The manner in which credit unions collaborate on shared services is under pressure, and it is going to increase costs and complexity, which is a very important point, and we'll talk about scale and how credit unions can achieve that needed scale, and we'll take this to panel in a few minutes. And lastly, in the bottom right corner there, consumer expectations regarding service levels and usability are rapidly increasing. And so these are some of the things that we'll be discussing as we go forward. So why has FISRA chosen this topic for today's breakout session? I'll start by assuring everybody, especially those that are either a member of management at a credit union or board members, this is not a precursor to us issuing further guidance or issuing a new rule or new regulations. That's not what it's for. Strategic planning, which really is a big part of what we're going to talk about today, is already a part of and covered under the Sound Business and Financial Practices Rule, which has been in effect for a couple of years now, and all credit unions, regardless of size and complexity, are meeting the requirements of the Sound Business and Financial Practices Rule. And the expectations and the requirements for strategic planning, including the involvement of the boards and the accountability of the boards, is already covered under the Sound Business and Financial Practices Rule. So some of the questions we ask are, what opportunities do you see looking forward? How will your business model need to adapt in response to these external changes, some of which we talked about in the last slide? How will you mitigate the related risks and some of the new and emerging risks? FISRA wants to emphasize the critical role that boards play in strategic planning process, and board members are ultimately, like I said, accountable for setting the credit union's strategy and setting the direction. Now, of course, senior management have a very important role, but really the accountability sits with the boards, and the direction that they give to senior management comes from the boards. And so board members must be actively involved in providing guidance and direction to management on your credit union's long-term objectives and strategic direction. So what does this look like in practice? The following that we'll be discussing is just an example that we're going to use on these external change factors, that one of those 5 that we discussed in a couple of slides ago. This example that we're going to use is not necessarily the most important one, but it is certainly one of the important change factors that are driving these changes and considerations. So let's look at a representative external force and its impact on the credit union sector. As a credit union leader, how will you and your organization respond to long-term changes in Ontario's demographics? And that's what we'll be discussing in the next couple of slides. This provides challenges and opportunities for credit unions, depending on how you prepare for Ontario that is quickly changing and evolving. Okay, so the next 3 slides are about demographics. And again, just keep this in mind. This is an example. We're not using this because we're saying this is the thing that FISRA is focusing on. This is the thing that FISRA finds most important. It's just an example context setting. Ontario is Canada's most populated province with over 15 million inhabitants. And by 2046, this number is going to surpass 21 million. Over 85% of this growth is expected to come from net migration. Each year, around 250,000 people, international immigrants, will settle in Ontario. New Ontarians generally come from India, China, Philippines, and the Middle East. You can see the kind of big bars on the upper right-hand side. So the question asked is, if you primarily serve an Ontario ethno-religious community, will you continue to have access to new immigrants and these new immigrant members? If you serve the general population, are you positioned to capture a share of these new Canadians that are coming in? And these numbers are steadily increasing as we go forward. Immigration also impacts geographic strategy, especially with the placement of branches for credit unions, for example. 2/3 of new immigrants settled in the Greater Toronto Area, the GTA, but also Ottawa, Hamilton, and the Kitchener-London corridor are very popular areas as well. So by 2048, almost half of Ontarians will live in the GTA. And rural regions will not experience the same population growth that these areas will. As well, Ontario's population is going to continue to age over the next few years. A combination of longer life expectancy and lower birth rates means that the number of seniors in the province will continue to rise in both relative and real terms. The share of seniors in rural areas will become even more pronounced because there will be less immigration to boost the working age population. So that's another consideration. For credit unions, these trends are even more accelerated and more pronounced because the average age of a credit union member is somewhere in the 50s, whereas the average age of an Ontarian is about 40. So a big difference of more than a decade. As we noted earlier, demographics is just one external force. Competition is also evolving very rapidly. Consumer expectations are rising. Technology is changing everything. So as a resilient financial institution, a credit union, actively planning for these changes, seeking opportunities, and mitigating related risks are very important. A resilient financial institution also anticipates change and changes and positions itself to be very ready for these changes. Many of these changes are too large and out of the control of us and credit unions, and it would be very difficult, if not impossible, for credit unions to manage this on their own, so they have to do this as a sector, and that's a big part of what we'll be talking about today. Sector solutions are required, sector leadership is required, and that is why we have our panelists here today, and that's what they're going to be talking about. So this is my last slide, and then we'll go into the panel. So just to reiterate, why is long-term planning and strategy a priority for FSRA? Mark, earlier on today, talked about the FSRA objects of protecting consumers, of maintaining financial stability, but also one of our priorities is to promote sustainable, competitive, and innovative financial sectors. That's actually listed as one of our objects, and you can see that in our annual business planning document and in the FSRA strategy. FSRA's interest is in the long-term viability of the credit union sector, and this interest is rooted in our objects, as Mark alluded to earlier on today. FSRA believes that strong sector leadership is required to address these challenges, and that's why we're here today, to hear from our panelists and not from FSRA. So our panelists are very deeply rooted, very passionate, very involved in the credit union sector, and with that, we'll go to the panel discussion, and will we leave the slides on, or should we take it off? I'll leave it to whoever's managing this. All right, so I'm going to stay up here, and at this point, I'm just going to ask some questions. We'll take this to panel. So this question is directed at all of you. And Lloyd, if we could start with you first, please. What do you see as big challenges and opportunities facing the credit unions and the credit union sector in the next 3 to 5 years?
Thank you, Merdad. Everybody hear me okay? Perfect. There's obviously a lot of challenges and opportunities that we've been facing for decades. I'll comment on, I think, 4 common challenges and maybe 2 or 3 opportunities. The first one that I think we're all facing is rising operating costs, mainly in people and technology. On the people side, I would look to what it takes to attract and retain talent that's required to run the credit union. On technology, again, it's your core systems, infrastructure, supportive systems. Think cybersecurity. I think we all have to invest pretty heavily into cyber to support. The second one for me would be compressed margins. And again, Merdad's comments talk about the fintechs, the new entrants that are coming into our sector. They have lower cost structures. They don't have legacy systems. As a result, they can sort of operate on lower margins. And then just technology in general, I think, has suppressed margins. Back 34 years ago, margins were a lot larger than they are today. Third, for me, would be growth and relevancy. Again, as a member or new members coming into our sector, they have lots of choices. Merdad's comments again, the average age of our members is aging well into the 50s. How are we being relevant to a younger demographic? How are we going to attract the younger demographic? I see that as a pretty big change, or a big challenge rather. And then the banks. Here in Ontario, the banks dominate the marketplace. 93% plus or minus have a market share dictated by the banks. And as a result, they have more resources and more access to capital to build systems and process and procedures to serve their customers. Again, a good example of the slides was immigration here in Ontario, in Canada for that matter. The banks have done a good job at building out those onboarding processes for welcoming new Canadians to our country and to Ontario. So it's a challenge, but I do feel it's also an opportunity for us. On the opportunity side, I said there are about 3, but there's lots of opportunities for us to embrace the credit union system in Ontario. First, for me, is expanding the revenue sources. For the longest time, 30, 40, 50 years ago, the credit unions operated on what I would call a margin model. And the banks today, about 50% of their revenue is in margin, and 50% is in non-margin income sources. So compare that to credit unions, it's around 75 to 85% of our revenue is margin. And I do think that we need to look for other sources of revenue to diversify and to continue to thrive in Ontario. And again, a couple examples of obviously most I think would have wealth. I think we need to expand the wealth offerings. Foreign exchange, again, I think there's good income opportunities for Ontario credit unions. And alternative investments is something that I would throw out there as a way to diversify our revenue away from non-margin income. Another opportunity I think that really exists for all of us is in the area of what I would call operational excellence. It's the how we do business, member to or employee to members, and even front office to back office, employees to employees. We need to figure out how to make things easier for members to want to do business. So operational excellence for me means a consistent, error-free, and fast experience. What else would you want as a consumer? So again, if you can make it consistent, error-free, and fast, make it easier to do business with, I think that's going to be a real opportunity for us to gain market share in Ontario. And again, some of the technologies that we heard this morning around machine learning and AI, again, robotics process automation, using technology for automating processes, continuous improvement, all of that will basically make a much stronger, what I call operating engine for your credit union going forward. And then on the other side of the AI that we heard this morning, using those advanced technologies for enhancing your customer experience. So I'll stop there, but certainly there's a lot of challenges, but I also feel there's tremendous opportunities for Ontario credit unions in the years to come.
Thank you, Lloyd. Jackie, please.
So my I think I'm going to focus a little bit on what is going to become table stakes. And I think that's where our new owners have a very low tolerance for technological drag or for process drag. And they've got choices, as Lloyd said. So they're going to move to wherever they can get what they need earlier and quicker. And so that's going to become the means for it's going to become table stakes. That's really, in order to play the game, that's what you're going to need to do. And that's where AI and all those technologies produce a little bit of a hesitation. But the positive side is that we can really differentiate ourselves by what makes us different. So instead of trying to say we're bank light, we're different. We can do all your financial services and we can offer some kind of addition. So whether that addition is like Vancity's had, putting a stake in the environmental world, which is incredibly attractive to people, whether it's having a community of ethnic that you support, whatever it is, I think that's where the values, it's not value add as in a capital world, but values add. What are the values that we're adding to the AI? If AI is going to be able to do your transactions, then we're going to differentiate by being something more than that and bringing the soul back to our banking.
Thank you, Jackie. Chris?
So my three are more short-term. I'm not denying the need for a longer-term vision, but I'd like to see that vision built on a very strong foundation. And so the first one is some credit unions are going to have low earnings. Some may even publish losses. And I think it's really important to think how the system collectively will maintain depositor confidence as media or individuals pick up that story. The second one, which has been my experience at Vancity and Vancity Community Investment Bank, maintain your capital adequacy and a cushion. Without capital adequacy compliance, you might be thrown off your strategy, you might be thrown off your investment requirements. So that's my second one. And then, before some of you were born, I started a credit union at the University of British Columbia. It was the third time we tried it. It merged with Teachers, that then merged with Vancity, and it's operating today. I strongly believe that credit unions, in the history of our credit union movement, especially shown in the prairies during the Great Depression, that we have a unique opportunity to offer selected forbearance rather than quick foreclosure. And I think that's a huge opportunity and a huge responsibility. During COVID, the regulatory environment and credit unions provided all kinds of deferrals to enable physical health, to let the community get to the other side. My own practice has been to let, through stagflation, get the members to the other side so the communities can be back on their feet. It's selected, but I think it's a huge opportunity and it's a great differentiator, and I'll talk about that a bit more.
Chris, you said forbearance instead of foreclosure. Can you just provide a bit more detail on that, please? What do you mean by that?
Well, I'll give you a specific case. During the great financial crisis, a family couldn't afford their home. So what's the point of throwing them out on the street and putting another house for sale on distress to lower the housing prices? What we did is, on our own account, wrote down the mortgage to the income of the family at 30%. You know what happened? The loyalty of that family is forever. The staff were engaged because we sent not the sheriff, but a solution. And on average, the costs of providing forbearance relative to a lawyer, taking people through the courts for 6 months, came out on top. It's not a blanket opportunity, but it's selected and it has huge impact. That's what I mean.
Thank you, Chris. Michael.
And as I said, we offered that a few years ago with regulatory approval during COVID. So I'm not making stuff up yet.
Yeah, that's a remarkable story, Chris, and you know, that's a really good example of, you know, what can differentiate us from some of our larger federally regulated competitors. I'm going to focus on more of the member/consumer angle, I guess. From where I sit in Ottawa, you know, we can call it open banking, call it consumer-directed finance, call it whatever you want. But to me, it's both a threat and an opportunity at the same time. Just the growing consumer awareness of the simple reality of, you know, guess what? You can shop around for your financial services. You know, people shop around for their cars, they shop around for their cell phones, they shop around for their groceries. But there's been a history in Canada of just inertia or humongous amounts of friction at the idea of shifting financial institutions. And I personally am an example of the same old story we've heard 1,000 times of, you know, when I started my professional career, I still had the same bank account that I opened when I was 10 years old. There's no real reason that that should be the case, except for all of the, you know, the friction that people think exists when it comes to the notion of switching financial institutions. Because I think there used to be a lot of friction, but now it's so much easier. You can get an app, you can do it on your phone with a few clicks, put in your info, and quickly and easily and cheaply or without any cost at all switch financial institutions. So I think there's a growing consumer awareness of that. Again, you can call it open banking or whatever the term you want to use. But that's obviously a threat and an opportunity, because it's on the downside, it means that it's easier for us perhaps to lose members, but the upside is that it becomes easier for us to show our value proposition and to gain membership. So, you know, that trend is, I would say, not quite in its infancy, it's probably in the puppy stage still, to use a metaphor that was used this morning, referring to FSRA. But it's gonna continue more and more, and the more people, you know, realize that it is in fact seamless and easy to move around and shop around for financial services, it'll gather like a snowball going down a hill. The other challenge, again, from where I sit in my role running the lobbying and the government relations for the sector, both in Ottawa at the federal level and across the country at the provincial level, is that, you know, there are some divisions that exist in the sector, largely, you know, between big and small, I would say, although that's, you know, a broad generalization, just in terms of what the future state of the sector should look like. And, you know, I know that the regulator here and elsewhere are neutral or agnostic or whatever the word is on consolidation, and that's as it should be, and we're the same way, though part of my organization's objectives is to work with regulators and governments to make mergers and consolidation easier and to bring down some of the obstacles that exist in those processes at both levels of government. But there is a divide amongst credit unions across Canada about, you know, perhaps what the future state of the sector should look like. And in my role and my team's role, when we're lobbying or talking to governments about an issue, we really do our best, because there's no shortage of issues, there's no shortage of policy challenges, there's no shortage of things that we could go and advocate on, either in Ottawa or Queen's Park or Victoria or St. John's or wherever. But we really try to focus on those issues that bring everybody together. You know, when the feds step in and say, well, you can't use the word bank or banking in your marketing terminology, it's obvious that everybody is going to be on the same side of that in the sector. It's going to create consensus. Everybody's going to be rowing in the same position. So for us, in a way, though, that was a crisis moment, and there's been others since then, it's obvious what the direction is and that there's consensus in the sector. But that's really the exception. On a lot of issues that are of importance to the sector, there's, you know, an emerging sort of division, not along regional lines necessarily, but more along sort of big v small, I would say. So I'll stop there and hand it back to Mehrdad.
So Michael, you talked about open banking and digital solutions, and in an earlier conversation, I think it was last week, and I've written this down as a note, you said younger people are aligned with credit union ethos, which I agree. I have 3 daughters in their 20s, they are, and yet none of them do their banking with credit unions. So he said younger people are aligned with credit union ethos, but they're turned off by the state of the digital solution. What did you mean by that?
Well, I mean, I feel that's fairly self-explanatory. Like everybody knows in every conference that I've ever attended, in the sector has spoken about the challenging demographics of the industry. And I think he said it was 57 or whatever the average age is of a credit union member across Canada versus a median age in the low 40s for the population as a whole. That's an obvious challenge. And there is an obvious value proposition when you look at, again, the word I used was ethos. The ethos of the movement, no other provider of financial services in Canada can, reliably call itself a movement as the credit union movement / sector industry often does, because it does have that cooperative history and ethos. We still have to compete, obviously, and earn margins. But we do have a really compelling story to tell, particularly, I think, to young people. As a person who was young not that long ago, I'm sort of in between now, young and old, I think that opportunity is there. But, of course, you got to have a digital offering that is, that my 8-year-old daughter can navigate with ease, which is increasingly the norm across the sector.
Okay, well, one of the very big issues that needs to be resolved and solved for. Chris, I'm going to turn to you to start this for the next question, please. How can credit unions leverage cooperative principles and social values for long-term competitive advantage?
Yeah, so let me tell you a little bit about the Vancity model. And there are a number of realities that we always faced. The community need is not necessarily a conventional banking solution. Take a housing co-op. How does it get the down payment? Does it not need some kind of interest reserve in case some of the members are unemployed or have cash flow difficulties? So to structure a community solution, of course the credit union steps up. But we had Vancity Capital that provided subordinated debt and patient capital. And we also had Vancity Foundation that would create a grant to a not-for-profit or a co-op. So you can, what I'm trying to paint is the community need is very uniquely positioned as an opportunity at this point in time, demographically, politically, and generationally. But the solution is not through a regulated deposit financial institution alone. In my work, you may have seen my badge with some of you. I am the chair of Community Forward Fund, and we have the privilege of managing the portfolio for the Canadian Cooperative Investment Fund. And so the Canadian Cooperative Investment Fund provides patient capital. The credit union provides the conventional loan, often with CMHC insurance, with zero capital, and you have an efficient model. And the partnership increasingly has the government and CMHC saying, I'm looking for those partners. I'm looking for those partners in community, and then I'm looking for a financial institution that's not afraid of funding a co-op or a women's shelter, because the banks are afraid of touching that because the publicity of foreclosure is their mentality, and oh no, we can't do that. What I will say about Vancity is that we found a niche, maybe 20 to 30% of the population, which is sufficient for scale and impact. But to the discipline of the long-term strategy, this solidifies the brand and the value proposition, but it's not sufficient for financial solvency. You still need the other work that Lloyd talked about on margin and cost and attraction. So I think we're in a sweet spot of the opportunity through partnership, and I've named some of the players that credit unions can meet.
Thank you, Chris. So Lloyd, as an operator who's operating in the Ontario system right now, to Chris's point on community and social values, what's your position on this?
Yeah, I mean, I think you go back to 80 years ago or so, people helping people. I think there's lots of those cooperative principles and values that we have where we can do well for our community and still be very viable and thrive in a market. At First Ontario, we did a few interesting projects in support of community. One was we co-developed a 9-story apartment building, 127 units. It was a big endeavor. We worked very supportive with the city and the the Niagara region, giving it basically some certain designations that allowed us to create these units. As Chris said, you've got to look at the stack. And we also had support from CMHC, who ultimately is carrying, we have a COI on that mortgage. But again, that was a good example where we're trying to be part of the solution. Housing is obviously terrible in all our communities. And so this is a particular project that we're very proud of the work we did. Obviously, we can't solve all the problems, but we just want to lead by example. A couple other small ones I'll mention around food insecurity. We try to support various food banks and the good work that they're doing, both in terms of work in kind. Myself and other of our employees go out to various food banks and donate our time. We call it Blue Wave. But we also provide a monetary check to support those organizations. And the last one I'll leave you with, which is one that is, it's a combination again of Blue Wave and obviously providing money. But we provide $250,000 a year, and that money goes to various grade schools, and they use that money to buy food. And then again, our Blue Wave volunteers go out and we work sort of side by side with the teachers, and we get to make breakfast for the kids. It's an absolute blast. It melts your heart. But you realize that obviously it goes back to those what I call credit union principles of people helping people. And I do think that we have to act and behave and work as a community. And that's a good example again of what we're doing for the small kids that are coming to school hungry. We're able to provide food for their in their stomach so they can learn.
Could I just jump in real quick, Merdad? I mean, just to add to some of that, the banks are obviously big and rich and well-resourced and everything else, but they're also giant bureaucracies. They're not at all nimble, and more importantly, they don't, as we all know, exactly enjoy a surplus of public regard, if I can put it in such terms. They're kind of seen as a necessary evil, and my role, it's national in scope. I have a sort of a view of what's going on across the country in different jurisdictions. Ontario, of course, is the biggest province, the biggest share of our country's GDP. But in the credit union sector, it's one of the lowest market share provinces. So I'm not sure why that is. That's a function of history and other factors. But in this province, there's tremendous upside. If we could just get a quarter of the way between where we are in Ontario to what the market share is in some other provinces of Canada, that would be like bringing on hundreds of thousands of new members. And I know that there's no magic wand that'll do that, but there is a tremendous upside in this province, I would say, just because, frankly, our market share is lower here than in other parts of the country.
Thanks, Michael. So Lloyd, I want to continue from where you left off and tying this back to the challenges and opportunities. And I've heard you say, credit unions, especially now, need to, as they should, and they have in the past, they need to hold hands. So how can credit unions work together more effectively?
Yeah, I think, again, one of the things that we're, I'll say, talking about at First Ontario, and one that we're certainly very happy to talk to other credit unions in the province, is what we're calling a shared service model. And really, a shared service model is about one credit union sharing in what they're doing. Could be on an expense reduction side or expense management, or it could be on a revenue opportunity side. And so that's something that, again, I think where credit unions, a lot of credit unions are doing amazing work. And so I think the whole idea of working together and collaborating on some kind of shared service model is something that I think we all need to embrace. I was talking at the break there with Rob Patterson, and again, we're not competitors. We're all part of this wonderful sector in the credit union sector, and again, working together, I do think, to what Michael said, is that we can really dominate, or at least have a much bigger market share. Another area, again, where I think that credit unions can sort of work, I'll say, work better together. If you look in the U.S., they have what I would call a CUSO, or a credit union service organization. I don't think we really have any good examples of that in Ontario or in Canada. If there are, I apologize. But the one that I would say maybe is the closest to that might be League Data, which is in the Maritimes, where they basically run banking systems for 40 of the maritime credit unions. And so it just sort of dawns on me that there's opportunities, I think, for CUSO-like organizations. And I'll give you one sort of idea that's sort of germinating in my head is the banks have basically been doing back office processing through SimCorp and Inter i3 for decades. And again, they compete like crazy on street corners, but yet they basically have these back office companies that are obviously just processing and fulfillment, and they're good with that. Another idea that I keep wondering about is again, with, I guess, support of CCUA, is why we can't maybe host some webinars and we have a sponsored credit union that basically is taking us all through a use study or a case study on something particular that they've done in terms of solving a challenge or solving an opportunity. I think it would be very beneficial for us to all sort of learn from that. And of course, then have it maybe written out so there's a repository where you can access it on your own time. And the last thing I'll leave you with is in Ontario years ago, we had what was called the ALACU, and it's the Alliance of Large Ontario Credit Unions. It is the top 10. It's since somewhat disbanded a little bit, but a few of my colleagues were away last week, and we were talking about, I call it reconstituting or repurposing that ALACU. And the intent of the ALACU for me is really about sort of addressing issues or challenges or opportunities that are common to all of us. And with that, again, what we were talking about last week is, certainly we should be looking to communicate down to all credit unions on the work that we're doing. So I know that a few of us were talking last week, and I hope that we can actually bring the ALACU back to life, I'll say, but certainly what comes out of that, make sure that we're sharing all of that knowledge to everyone. So what I would leave you with is, for me, I think going forward over the next 3 to 5 years, it's really important that we information share, that we obviously consider these service, or I guess, shared service models, ways in which we can collaborate and work together.
Thanks, Lloyd. So, Michael, given that we've talked about how some of these problems each individual credit union may not be able to address on their own, and you, through CCUA, have visibility into many credit unions, and all the credit unions definitely in Ontario. How do you think credit unions can work more effectively to address some of these challenges and opportunities? And can these CUSOs, credit union service organizations, is there any agreement amongst credit unions? Do we need some? Can we employ ones that are already existing? What's your perspective?
Yeah, I don't think so. I mean, my earlier remarks spoke to, some divisions that are sort of emerging across the sector with regards to some of these major issues. Board governance is one of them. It's obviously a key issue that regulators across the country are looking at. CCUA has, we established a partnership with ICD to bring that rigor of board director education to the sector. But there's a wide degree of, or a wide variety of views across the sector in terms of what that should look like. And, you also have to deal with the reality of on the ground in, small communities. It can be difficult to get the kind of expertise that you need to have an effective board. So that's certainly a challenge. When I look at my role and my team's role, I keep saying my role, but my team does all the work. So I have to give them all of the credit. Running a trade association in any sector is a challenge, particularly one such as ours with such a wide variety of members. A lot of industries out there, they'll have a trade association, but the members are a lot more similar to one another. That's completely not the case in the credit union sector. So when we're trying to marshal our members on an issue of policy or a challenge with the government, either in Ontario or elsewhere, it's important for all individual credit unions to realize that, sometimes for the greater good of the sector, you got to put a little bit of water in your wine, and we can't necessarily go lobby a government on an issue of importance to 2 or 3 members, even if it feels red hot to those 2 or 3 members. We really, like I said earlier, have to do the work to identify those issues that unify our members, but also from the members' point of view, from the credit union's point of view, that is to say, it's important to understand that we all got to work together on some of these challenges, and that means sometimes you're not always going to get everything that you want. And an interesting example of that recently in Ontario was, we had some back and forth, Merdad, with you and the team on EDC, on enhanced data collection. That was a heavy lift for a lot of the smaller credit unions across the province in 2022 and 23. And, you know, we acted as a bridge between your team and our members to, you know, I think pretty effectively deal with that. And we obviously recognize, as do credit unions here and elsewhere, that data is key. You can't measure, you can't regulate what you don't have key data on. So we're fully on board with that. But, you know, there just has to be flexibility from the government's and the regulators' point of view, and then from the credit union's point of view. Again, there has to be an acknowledgement that, you know, sometimes we gotta buckle up a little bit and again put a bit of water in our wine to identify those issues of you know, common issues that we have to work together for as a sector together.
Thanks, Michael. So panel members by now know they got to be careful what they say around me. So Chris, I'm going to quote you again. Right, I think I'm going to quote you. You said something, I think it was a couple of weeks ago. You said there isn't just a path to efficient mergers. So talking about credit unions working together and gaining that effective scale that's needed. So what did you mean by there isn't just a path to effective mergers? Chris.
Yeah, I think when I'm not in the current operations like my colleagues here, but when I reflect on the energy that's going in different credit union constituencies and alliances or visions, I think we're all struggling to break through all of the issues that were at the front of the slide for long-term planning. And so probably for the next few years, that cohesion is going to look more like going off in different directions in order to find what is the strongest path. In British Columbia, there's a natural consolidation that's happening. Part of it is retirement and inability to garner the talent that's necessary, but the community presence is not going away. And so I've studied different transformations. Some provinces accelerate. In the case of Australia, they actually changed regulations from a provincial level to a state level to a federal level, as many of you may have observed. But I would conclude that the strength is the community governance, and that if you have the capital and hopefully the regulatory framework of operating with innovation, that we should just be patient and recognize that we're going to have a disparate period before some breakthroughs are stronger than others.
Thank you, Chris. So Jackie, the next question is for boards. So you're the perfect person to answer it. Given that the environment has become more complex, a lot more complex than even 10 years ago, and the role of board directors has also become complex because of this. How does it work in practice regarding board members and their accountability for the credit union strategy?
So strategy is a little bit of a challenge when you're in such a disruptive environment with so many factors. So I thought I would tell a little bit of a story about a company that was incredibly successful in 2004. The company was called Blockbuster. Some of you may remember them. They had 84,000 employees and operated 9,000 stores in 2004. And they started losing money. And so I often wonder what the board of directors were saying that first year that they lost money. So did they say, oh, it's okay, we're going to pay the bonuses to senior management anyway because we're nice? Or are they going to say, you know what, it was a Y2K issue, or the internet is overrated, it's just a blip? 10 years later, Blockbuster was bankrupt. It took 10 years for them to go bankrupt, and in that time, they weren't able, as a board, to determine a change or a shift in their strategy. At the end of the day, they went bankrupt because they charged one of their owners $40 in late fees. And that customer was named Reed Hastings. And Reed Hastings was so annoyed at being charged late fees that he started Netflix. And Netflix was a male DVD subscription at that time. And obviously today Netflix has soared. So when you put your mind in the mind of that board, management is saying, let's double down. Our strategy is good. We're successful. We've been successful up to this point. As a board member, you have to say, and what if? What if things do change? What if technology is going to dramatically change, like AI? We can't run away from it. We have to understand it and understand what's going to happen in 5 years. This morning, we talked about a lot of things that have the opportunity to really shift our strategy in 5 years. And as board members, we have to understand what those forces are and what they can prepare us for. And I think when we talk about our customers, our owners, there is a value proposition that we can provide to them that is really secure, but we have to think about it. What does that value proposition look like in 5 years or in 10 years? And stress test it based on the environment that you operate in. In London, where we are headquartered, we have competing demands right now. We have the migration of people from the GTA looking for homes that are affordable and a lifestyle that is comfortable. And they're coming into London and the surrounding small towns. At the same time, we have huge consolidation that has happened in our rural farming communities. And it's really challenging to actually get people to work in some of the smaller communities because young people have left. The farmers are now large farms rather than small family farms. So you have this dichotomy. So when we look at our book and we're servicing those communities, what does that mean for us having a branch in a community of 5,000 people? Do we stay? Do we go? And what does that mean? So when I look at strategy, I thought about a few things that we should be looking at, if I can read them. The first thing I think is making sure we have the data. We really need to make decisions based on data, not based on anecdotal information. We also have to really look at what business are we in. We heard today lots of different areas that we can get involved in, lots of community problems that we can try and solve. But at the end of the day, we have to be disciplined to say we're in the financial services business. And if we do that well, then we are able to invest more. If we don't do that well, if we don't have enough capital at the end of the day, then we're no good for anyone. And I guess also who we serve as well, because we can't serve everybody. We may need to have the discipline to say, this is the customer that we're going to serve, and there'll be another credit union who can serve a different customer. We have this year actually demarketed a couple of businesses that were outside of our risk tolerance, and that's okay. We need to have the courage in order to do that. So I'm going to end today with 5 cautions that I think we need to look at. One of them is don't get old because you can't read your notes. The first one, and I think having a brand new CEO has highlighted this for me, is that we really need to be cautious of using the past as a predictor for the future. Our future right now is very different than our past has ever been. And so we can't really take one and implant it on the other. And having said that, there's always more than one possible outcome. We aren't on a trajectory where we're all going to be moving in the same direction. So we need to plan different scenarios. We need to plan different outcomes. if you had asked me 10 years ago when I started on the board whether we were going to have a global pandemic, which was going to shut everything down, and interest rates were going to go up so high, who would have thought? And we need to scenario plan so that we can stress test for those. Don't underestimate technology and the importance of technology to people. People like their technology. They like making their lives easier. If you can imagine, my grandfather just loved email because it was so seamless. Instead of taking 6 weeks to communicate with his friends, he could do it instantaneously. Today, he would have been the first person on video conferencing. He just loved it. But don't overestimate shiny things. 10 years ago, Bitcoin was going to put us all out of business. We were all going to be crazy. And it was a shiny thing. And the final thing is to differentiate between your core fundamentals that can't change. It's the DNA of who we are. And those traditions that can change and need to change because it's time to change.
Thank you, Jackie. So we've been talking about solutions that the sector needs to come up with, that needs to be sector-led, sector-driven. What do you think about boards, and not just their role and responsibility, which we know they have for their credit union strategy, but the role they play for the sector strategy?
I think boards need to get out a little bit more and meet other board members, because that board-to-board conversations, you realize that we're not different. As much as we like to say that we're all nuanced and we're all different, we're more alike than anything else. We're more alike than we are different. And in those conversations, solutions can come up. And we need to stop being quite so defensive of our turf. We say we don't compete, but we do compete. I don't know if anyone's here from Windsor Family, but when I saw WFU came into London, it's like, what the heck? This is my town. You can't come in here. I think it's those kinds of reactions. We need to get to know each other and get to know what the business model is.
Thank you, Jackie. Anybody else want to continue along that line, or should we move on to the next question? All right, we'll move on to the next question. I didn't want to get to this question, but this one has to do with regulators, aka FSRA. And I promise you, we didn't feed the answers to the panel members. They're going to say what they want. So the question is, how can regulators support the credit union sector's evolution? And this is to all of you, please.
Who wants to take that first?
I'll go. I'll stick my neck out. If each one of us maintains the proper governance and the proper compliance, and we're not being staged, then the regulator, in my opinion, has the capacity to go to the Minister of Finance and say, protect your regional financial institution network, which can be a driver for economic development. And in British Columbia right now, the credit unions deliver the accelerated housing starts in the affordable housing sector. But that's an accountability that is ours to enable the regulator to play the role of not going to the deposit insurance relief fund, but to provide relief to the province in terms of an economic engine. Which then leaves us, as credit union operators, focused on member and community. It's a big challenge to stay in that center of adequate liquidity, adequate capital, and adequate return. But that's my vision.
I'll go next. Oh, sorry, Jackie, did you raise your hand?
Yeah.
Okay, go ahead.
I'm not sure. I think one of the things the regulator can do is help us to determine what best practices are through regulation. So I think it was mentioned this morning in the AI conversation that it's hard for us to know what best practices are and to have all that knowledge. Whereas if you have the assurance that if you're following the regulations, that by default, you're doing best practices, then that's actually kind of helpful. So we know that if we meet your standard, then we're doing best practices.
So I have thoughts. A couple of things. I would say and this isn't just for Ontario, but it's in general, be open to different strategies. We have modeling at the national level that suggests that in 2030, which is, only a half a decade from now, believe it or not, the sort of 80 or 90% confidence interval is somewhere between 90 and 110 credit unions in Canada. So roughly half of the number of institutions we have now. So that would suggest for Ontario, it's 25 or 30 kind of ballpark. Obviously, the further out into the future you get, the less and less reliable those predictions are. But it does suggest a pace of continued consolidation in this province and elsewhere. But it also suggests that you're going to continue to have in 2030 and 2040 a wide variety of institutions to regulate, big, small, and everything in between, that are all going to have different strategies. Some of their strategies may be to eventually consider pursuing federal regulation. Some will, merge with other institutions. Some may partner with federally regulated credit unions in other provinces. And we know that there's, one example of that has started to take place between Alberta and Saskatchewan. So just be open to, continuing to regulate, of course, a wide variety of institutions, and be open to having a flexible approach in terms of what their respective strategies are going to be. So that's request number one. Request number two, please, for the love of God, work with Ottawa and the federal government, right? Like, if you think the banks are big and scary, the federal government is like a drunk elephant sometimes. It just stumbles around, and it has the capacity to crush us. And by neglect or ignorance or however you want to call it, the feds have shown themselves capable of throwing up existential challenges to the credit union sector just because they don't have a direct line of sight into it. They think the financial sector in Canada is 5 institutions. When there's a crisis like COVID, they want to deal with 5 CEOs and not 200. But that has caused major problems for us. And in Ottawa, I can tell you, we're constantly coming up against that reality. So please help us, educate our federal colleagues and friends in the national capital that the provincially regulated credit union sector is, obviously a key part of the landscape in Canada.
All right, Lloyd, please.
I think, again, it was said earlier by Jackie, the past isn't always the predictor of the future. And from the credit union perspective, it continues to evolve, and that's really what this whole panel discussion today is around, how the credit union sector is evolving. So I think from a regulator point of view and regulation, I always say everyone has a job to do, and again, when it comes to regulation, it's an important element of what builds the public trust that we have in our sector. And I just think as business changes, as the world changes, as technology ultimately is going to change the way in which we as consumers live our lives, I think as a regulator, it's important that they keep up as well, and they understand how the business is going to thrive into the future. So we really need a strong working relationship with our regulator, and obviously one that obviously speaks to what's changing in our society today.
Any last few comments before we go into questions? All right, great. So we're right on time, so we have time for questions. I'm looking at the monitor. I don't see any popping up yet. Let's give it a minute. I'm sure some of you have questions. Oh my God, I can't read that. Excuse me, I'm going to come over here.
It's false, apparently.
That's so small. Jackie, what does that say?
It says false.
Is there an opportunity for the sector to come together collectively to tackle significant socioeconomic challenges such as affordable housing?
Okay, that's for you guys, not me, so please go ahead.
I read the question.
The font is this big.
Well, again, I'll just maybe, I'll start and maybe my colleagues here. Again, I gave an example of what was done at First Ontario, and again, what we tried to do was to just demonstrate a model, and one that we were hoping others would pick up, not necessarily credit unions, but certainly other builders and other folks in that trade that would realize that there's a need for creating housing stock. So again, it is a big problem, and we'd like to say that we can't solve it all, but we want to be part of the solution. So could we, again, use that example of what we did and share that and allow other folks in Ontario to come together? I think the answer is yes, that is a possibility.
Yeah, and I think politically, like I said earlier, there seems to be a handout from federal agencies, and they're looking for a partner who's capable of understanding the intricacies of what it takes to deliver non-market housing in a time of high interest rates and escalating construction costs. And often that's also a not-for-profit builder. So I think that we have the alliance and the trust of all the players in the chain. I don't have a national view on this, but I know that in every province there's a provincial housing cooperative federation, and there are strong not-for-profit housing advocates, and I do think that they are naturally aligned. Our business losses are not in the construction area usually, because there's some CMHC insurance. But I do say it's a unique product because often it does need an interest reserve to solidify the tenancy and solidify the debt servicing.
I think there's also an opportunity for something a little bit new when it comes to mortgages. We're talking about the amortization period extending a little bit, but why not set up a rent-to-own kind of environment? You can't do it again through your regulated body, but you have young people who have the money to pay a mortgage or rent. They can't pay both. So they can't save up their down payment because they're in the middle of paying rent. I have 3 of them. They're called kids. So, and they're fortunate because they have parents who are supporting and able to provide that. But what about the young people who don't have the ability to do that? So I think in that respects, being a little bit more creative about mortgage products would be something that would be interesting.
All right.
Sorry, if I could
go,
just
of
jump in
course,
real quick. One of the great things about Canada, really, and the way that the Federation is meant to work, though it doesn't always, of course, work perfectly, is that good ideas from one part of the country can go across the rest of the country. So from where I sit, I could see that being a potential answer to this question. We can't solve all of the world's problems, obviously. These are very, very complicated issues, climate, housing, all those giant mega issues that we're all aware of. But, I can tell you that just as an example, the government of New Brunswick at the provincial level reached out proactively to our sector in the province to design and deliver affordable housing solutions and financing. And without getting into the details, it's a model that could potentially be exported, I guess, to other parts of the country. So that's a role that we can play, and I know that my team works together very closely in the provinces. Obviously they cover their respective jurisdictions, whether it's Saskatchewan, New Brunswick, or BC, or Ontario. But when there is something that works in one province, there's no reason that it shouldn't work in another. And that's an important part of the role that we play in helping to pitch those ideas across the country to governments and regulators.
All right, we'll try to give some more time to other questions. Hopefully the font is bigger this time. Oh God, it's the same size. Can somebody please read that?
Sure. How does the panel perceive the long-term future of small to mid-sized community credit unions, given the likes of technological disruptions like AI open banking, where larger credit unions and banks can afford to invest. So I can start this one and tell you that larger credit unions can't invest on their own either. When you talk about large credit unions, they don't have nearly the money that the banks have to invest in these technologies. And so the larger credit unions are actually cooperating across the country in looking at, right now, not AI and open banking, but through the payment modernization. So I think it will require cooperation. And to me, the future of small and mid-sized community credit unions, again, requires cooperation. We need to have joint services and build these technologies together. Otherwise, none of us are going to be able to provide the services.
Any other perspectives?
You know, again, I will just add to what Jackie said. I mean, at one point in time, many decades, there was about 1,000 credit unions in Ontario, and I think I heard this morning there's 58. So consolidation has been a part of, let's say, this credit union system for well over 30 years now. Is technology, what's driving consolidation? Maybe it is, but like I would say, and I said earlier, I think the business world and the business models are changing, and credit unions need to change with it in order for them to not only just survive but thrive. So I do feel that it's going to be harder as for smaller, mid-sized credit unions to continue to invest in what is required to serve their members. But I think we heard this morning from, I think it was Mark White, who commented that there's certain small credit unions that can stay and thrive for their members forever. It all depends on your membership and what they're looking for. I think the reference to community credit union means, it's obviously a little bit more challenging, I would say, because those members have choices. As I said in my comments as well, there's so many choices that members have today to how they want to do business. So again, cooperation, working together, shared services, you heard me say that earlier. I do feel that that's what's required for us to sort of work together and support the small, medium-sized credit unions. But I would also say that just looking at the history, there's been a lot of consolidation, and I think it's because it is difficult as things have changed, and technology is definitely changing how business is being done, and that's putting a lot of cost pressures on credit unions.
Thank you, panel. Let's see if there's another. The font got bigger, so I can read it.
It did, yeah.
That's the same question, right?
Yeah, it's the same
Is there a third question? Not yet. There's got to be a third question. Come on.
I think we answered everything.
Nobody has any questions. You can get up and say it if you like. You okay? You've asked questions. Please stand up and ask.
Okay, so it is a challenge, and we have a similar challenge at Libro as well, because we're trying to attract people who have the expertise and the experience. I think one of the things that we can do is to use the training that's provided, and I actually met a gentleman at a conference who had done their CUDA training before they even got on to the board. So I think that would be something that I would encourage is to have people thinking about it beforehand. But the other piece of it is through technology and through the video conferencing that we've had, you don't actually have to be limited to the community in which you operate. So we're hoping that some of the stretch can be a little bit broader when it comes to getting those people with good governance. And a lot of it, unfortunately, is training them up and very quickly as well, which is a bit of a challenge. And it's an ongoing issue, definitely. The main challenge, to be honest, is not the helping them to understand what their role is versus what their role isn't, I think is the biggest problem. They think they're going to be able to come in as customers and, change service charges or, give people loans, or, they come in with a very operational mindset. That's the mindset that's the hardest to get rid of.
Thank you, Jackie. I see another question that's come up here. It's about resources. What resources would you suggest for board directors who want to come up to speed with the challenges that we've talked about, and also about long-term strategic planning? So we have a short amount of time, a couple of minutes. Maybe we can start that, but I suggest if you can contact us at FSRA, we can talk to the panel members as well. And if we can gather maybe some of those resources, there might be some links that we can gather for you, and then we can send that to you. That might satisfy your question here better than just a minute up here. But does anybody have any ideas at the moment?
ICD, CCUA, Google.
What Jackie said.
Chris, Lloyd?
No, I had the same kind of thoughts around CCUA as an information source. And obviously, I think a lot of directors now are embarking on their ICD certifications. I think it's really just designed to sort of support you as directors. As again, the business model for credit unions is definitely getting more complex. So supportive work with CCUA and the ICD would be excellent for you.
All right, thank you. All right, we're just exactly on time, so we'll put up the last slide, and I think it's called Wrap Up. Do I need to push something? All right, magic. All right, so this is called Wrap Up, but it's not really a wrap up. The point of this panel and this session was to, I can't say get the discussion and dialogue started, because you can talk to Chris. This has been going on for decades, as it should, but there are certain things in the environment that are exaggerating and exacerbating the situation. So we do need some, as I've said, some sector-led and sector solutions worked out very soon for this sector to be long-term viable for the foreseeable future. From FSRA's perspective, we think it's very important, as you've heard, for not just senior management to be involved, but for the boards to be involved as well. And as Jackie said, for boards to talk to other boards. Senior management already do that, they talk to each other, but for boards to talk to other boards, because we do need a sector strategy and a sector solution going forward. And at FSRA, as it says here, we are very interested in working with you, credit unions, to do what we can, given our legislative and mandate constraints, because there's certain things we can do and other things we can. But given that we can do certain things, we would like to work with you on those proposed solutions to implement them, to make them work. And so we're very interested in that work. I just wanted to thank a few people before we head off to reception, which I think is just going to be out here. So Jackie, Chris, Michael, and Lloyd, thank you very much. That was a fantastic panel. As well, there were some other people, my FSRA colleagues, that were working on this to prepare us for this session. Where is Doug McDonald? I saw me. Oh, Doug McDonald's right there. Dan Oprescu, he's over there. David Maxwell, he's
Right at the back.
Back of the room.
David Maxwell back there making sure everything goes well. So he's our head of regulation. Dan is our head of supervision. And Steve Cochlearis, who's our director of approvals. They were all very closely involved with panel and setting up this session. So thank you very much. And see you all at reception.
Thank you.
Thank you.